What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to talk about some stocks that we're watching to start off the year and go into January. Now, these stocks that we're going to talk about some price targets and some breakout points. But first, let's go ahead and talk about what's going on in the overall market. That way we can have some general direction to focus on. If you are bullish on the market, you obviously are going to need an upside move. This upside move on SPY specifically is going to need to break above 388 in order for us to see a move to 395 and then a move to 400. Now keep in mind, when we did consolidate above 388, we did so for about one full month before breaking below it and consolidating. So if we are able to regain that level above 388 that we had from this period to this period, that means the bulls are going to take full charge again, and we're very likely to see 395 to 400 once again. Now zooming out to the weekly candles, we can see that SPY is still trading below its 10 and 20-day moving averages. We can see that right here, SPY is below the 10 and the 20-day moving averages on the weekly chart. So when you go into this week, the first thing you want to look at is where does the SPY's weekly candle open? Does it open below the 10 and 20 or above them? It's very much likely that it's going to open below them. If it does open below them, then by Friday, which is the first week of January, you're going to want to see that weekly candle close above that 10 and the 20-day moving averages in order for the bulls to start taking charge again. If we can't make that happen, that means we are likely to come back down and retest the lows right around 375. Now moving back to the hourly candles on SPY, to the bottom side, we have a support right around 374.77, which is right around 375, which was the lowest point right here. If we do break below that point, then we are likely going to move to the 200-day moving average once again. The last time we tested the 200-day moving average, we managed to bounce back for the next 2 months or so. Now, if we do get pushed back down to that level, then we are likely going to break below it and set our next leg down. In order for us to do so, we will need to break below the 52-week lows, which was right around 348. If we break below this level that we made in October, that means we are likely going to fall towards 320 to 325 next. So prepare yourself for a very big downfall if we break below the 52-week low right around 348. However, on the shorter term levels, because it's not likely that we see 348 that quickly, make sure you pay attention to these levels as your first support points. Now we're going to switch over and we're going to talk about some stocks that we're watching for the week. But before we do so, we're going to talk about the economic calendar that we have ahead of us. The first major event that we have is going to be the FOMC minutes release. So on Wednesday, January 4th, we should be expecting the Fed to release their minutes report. This minutes report will pretty much recap what went on in the last Fed's meeting, and we will also talk about some projections that are happening in the months ahead and in the next Fed meeting. So this is a very important event to pay attention to, but it's unlikely that we see any groundbreaking updates from it. The next major event is going to be all around labor market and employment. First, we have the ADP employment report, then we have the initial jobless claims, and finally, last but not least, we have the unemployment rate, which is expected Friday, January 6th. So the unemployment rate is going to be the biggest report this week because it is going to set direction to where the Feds need to pivot to next. So keep in mind that unemployment generally below 5% is good news because the Fed want to see people working. However, the idea of them raising interest rates for the last year is so people stop spending so much. And in order for people to stop spending, we need a higher unemployment rate. The unemployment rate still at 3.7% is a good sign for the economy, but it's a bad sign for the inflation fight that we're fighting. Because the Fed want people to go out of jobs, ironically speaking, of course, we want people to stay in jobs, but the more people not working is the less people spending, therefore the less likely inflation is going to persist. So that's going to be the biggest report to pay attention to. The reaction of the market is going to be unpredictable, so going into Friday, it's likely better that we don't swing anything into Friday, and that's going to be our approach. But if you are looking to play bullish or bearish, make sure you understand that there's really no telling how the market will react, even if we go over 3.7% or below 3.7%. Now, let's talk about some stocks that we're watching for the week. The first stock that we're watching is going to be Apple. Apple, everybody loves it, but unfortunately, Apple has had a pretty rough couple weeks. So Apple is down so far, and it was sliding down almost all of December. Apple has a resistance at 131. We are looking for a breakout above 131. That way we play it to a price target of around 133. So that's going to be our first focus for the week, which is Apple. The next stock we're watching is going to be Meta. So for Meta, we are looking at these levels here. Let's go ahead and zoom in. We have a breakout set at 124.70. Above 124.70, our price target is 131.75. If Meta fails and it moves below 112.30, then we have a price target of 108 to the downside if you are looking to play against the stock. Next stock we have on our watch list is going to be Moderna. Moderna is going to have a breakout level at 184. So if it moves above 184, we have our first price target at 190. So we would collect our position here, or we can take on a heavier position and only cut half here and take more profits right around 197. If Moderna moves below 172, then this is our price target down here. Next stock on our watch list is going to be Target. If Target can break above 150 this week, then we have a price target right around 152 to 153. So that's going to be a quick scalp. Or if Target breaks below 146.35, we have a price target right around 143.60. Last but not least, our next price target is going to be set on Nvidia. We have a price target on Nvidia of 154 if it breaks above 148.70. If Nvidia doesn't break above 148.70 and it moves to the low of its range, which is 138.47, if it moves below that level, then we have a short target of 134.30. So that's going to be it. Thank you guys so much for checking in. Please don't forget to subscribe and give us a thumbs up.